Welcome to TheoTrade. This is Don Kaufman. Here we are. It is May 4th, 2016. I am doing the Theo video evening report. The S&Ps, well, and the rest of the market still open right now. We've got almost a half an hour to go to the close. But really what I have in store for you this afternoon, this evening, is something a little bit different. We're not per se going to look at a huge amount of the intraday action. And that's because, last evening I went out and I met a couple of traders, talked to them for a while, got in a couple of heated arguments, but we all have tendency to look at things relatively the same. And again, these are some traders that have been around the business for, pretty much since the business has been around. So I want to start this afternoon and again, with a half an hour to go to the close, the S&Ps are down 12 over here, slipping. Bonds are up a little bit, yada, yada, yada. Oil's not doing anything, and it's kind of a mixed bag of goods. But again, just to start, in the SPX, a 10-year monthly, just to gain some perspective on where we happen to be right now. So, prepare yourself, if you will, here for what we are ultimately looking at, and that is just recognize how far we've come, that we're a stone's throw away ultimately from all-time highs. And one of the things I want to reiterate as I kind of kick this off over here is about risk reward. And everybody has to make this decision for themselves, but I can't think of a better time to reiterate my kind of ideals about risk reward outside of what you think are going to occur inside of the market. And that simply means this. And, the one reality is, again, I mentioned having gone out last night, talked to a couple of traders over here. And what I found in discussing with the traders is that, we might all disagree in different areas. Again, a couple of conversations got a little bit heated over here. But one thing that through and through is never going to be argued over here is that look at the risk reward inside of the S&P right now, and this isn't a conversation. This isn't like open for interpretation. What I'm actually referencing is, I'll even kind of zoom out on the chart. What do you truly believe that you have in terms of upside potential right now in the S&Ps versus your downside risk? And this is something that I mentioned, everything from intraday trades. That means, you get into a position for today, for right now. I look at the risk versus the reward. And I'm not talking about like a risk one to be able to make two. Okay. You look at something like this in the SPX, okay, which is the S&P 500, and you're going to see very, very similar chart. In almost every product that you look at is going to have, for the most part, some correlation, especially the big market cap stuff, right? They're all going to look very, very similar to the S&P. So I use the S&P as kind of, one size fits all, even though there is some variation in that. But in looking at the S&Ps, what I'm referencing is how much real upside can possibly be left in the S&Ps versus, again, the downside risk. And although traders from all shapes and sizes may disagree on what they believe the next move of the S&Ps are, and that's what you're getting, on financial media right now. You're being bombarded by, we're going up, we're going down. In fact, they always find one person on each side of the trade. This guy says it's going up. This guy says it's going down. Who was right? I don't know. Maybe they were both right. You think about that for a second. There's no question, okay, to the fact the S&Ps could rally up another 100 points. Why do I say that? Well, hey, listen, if you zoom in over here, go back into a 3-year daily, we just rallied up like 300 points, okay? But again, now more than ever, you focus on this idea of, number one, we really haven't moved, okay, in the S&Ps since, roughly speaking, mid to late 2014. Here I am, right, 2014. Yeah, we're only a few points north of that, right? This is the S&Ps here at 2000. In fact, you can even make an argument, right, into mid 2014 that we really haven't moved. This is not an up move when you've had these downward momentums. Here we are at 1800, but don't worry, we're at 2100, but here we are today at 2050. Okay? The point to be made is that if there is upside potential, okay, and that's something you can't argue because you never know. Janet Yellen comes out of the bat cave and boom, the S&Ps explode by 150 points higher, right up here to 2150. You can never discount that. But right now, the risk is clearly to the downside in the marketplace, and that this is not, okay, the most balanced equation, if you will. That if you're looking at markets, okay, and you try to be as objective as you possibly can, and I happen to have bearish positions on, and I will make no two ways about that. Nevertheless, my bearish positions are because of this risk reward. And the simple fact of the matter is, and to kind of script this out, and I know I've done this, here at TheoTrade before, but I can't think of a more appropriate time to do this because we're starting to slip a little bit. And the S&Ps, they've only come down 50 points. And I'll come to that in just a moment. But the reality is, if you really do have upside, let's get crazy. Let's say in the next 6 months, what do we have? 200 points to the upside in the S&Ps? I mean, we've already come from 1,800 back to 2,100. We've already had a 300-point move to the upside. So maybe we have 200 points to the downside. What realistically do you think you have to the downside? 1,800? Easy. That's easy, okay? Right there. That's 250 points. Now, this is where, again, talking to some traders last night, none of us could really argue. Most of us, though, agreed that the real downside potential could even be down to the 1,600 level. So the easiest thing to look at is, again, I think that this is a pretty crazy number to think that we're going to go up in the next, let's say, 6 months, that we could go up another 200 points versus, for instance, down 250. But again, I think the downside risk is much more ominous at this point. Now, let's see what the markets say about that. And one of the things I said 6 months. Now, again, I'm looking a little further out into the future. Why? Just trying to give you perspective for your investments. And not everything here at TheoTrade needs to be, oh, what are we doing? Let's buy, let's sell so hard we're going to buy. We don't have to be quite that myopic, quite that short duration. I mean, frankly, if you look at how I trade, I actually trade around existing positions. I've got like a short Costco position. I've had that for a long time. I'm comfortable with it. And I actually buy and sell options around sometimes my stock position. So I have longer duration holdings. What I want you guys thinking about here isn't just long duration holdings. It's about your 401k. It's about your IRA. Okay? And now I go over to the trade tab and on thinkorswim and I look out, 6 months, a year. So here's 180 days out. And again, I'll just highlight this for you. And again, stop watching the markets because it doesn't matter for this. Here's 180 days out. Look at the expected move. It's plus or minus, okay, about 200, and we'll call it $40. And what that expected move means is it's saying a normal occurrence inside of this S&P takes us plus $240 or minus $240. Okay? But you just looked at the exact same, chart that I did. And we just came off a 300-point rally. So all the traders ask, do you really think that there's a 240-point up move left inside of the next 6 months? And I couldn't get even the craziest trader last night to agree to the fact that we could move 240 points to the upside. And that's the point that I wanted to make. Every one of these traders said that we could actually move down 400 to 500 points in the S&Ps. The most anybody said we could move to the upside was about 200. So I reiterate my stance, all right, on risk reward right now in the S&Ps, and that's why I started with this much broader look. Now, here comes for a little bit more of the controversial portion of it. Every single day in the major media, we're being bombarded by talk of the FOMC, okay, or the European version of the FOMC, okay, run by none other than Mario Draghi, who sometimes I call Ivan Drago. I like it. Or stimulus out of China, or out of Japan, which has become, Japan's become the petri dish, okay, of negative interest rates gone awry. It's not working. Well, today, even Bill Gross, the former PIMCO head, headed over to Janus, wrote almost like an op-ed piece, and it just tore apart, okay, the entire idea that they're ever going to raise interest rates. And he said, you know, in part of it, he said, step back and take a look at the bonds. So the way to look at the bonds maybe isn't to look at the actual bond. Let's look at the TLT, which is the ETF. He says, if you think they're raising interest rates, ultimately sorely mistaken over here. This is a 10-year monthly in the bonds. Do you realize as the bonds rally, interest rates do nothing but what? They go down. The bond market is saying the exact opposite of the FOMC, okay? The bond market is actually agreeing with the rest of the world that it's going into lower rates, negative interest rates even possible out there, and that other forms of stimulus are going to be on the rise, not overseas, here, okay? That the FOMC will actually counteract and backtrack what they have ultimately planned as rate increases as the economy dives. So, and I said, that's a little bit of the controversial portion of this. And, you know, I don't want to make this the huge op-ed piece, but all I see, okay, in the futures of markets is not that the S&Ps can't rally, not that individual stocks don't have some momentum to the upside. The risk right now, though, when you look at those S&P futures, and I say it without unequivocation, it's to the downside over here. We are seeing signs of that risk starting to bubble up inside of the marketplace. The bonds over just the last few days, okay, they're starting to get a little bit more heated. They're starting to rally back up over here just in the last couple of days. We're seeing movement. If you are into the VIX, the volatility index, what is it doing? It's starting to move up just a little bit. But we're in that like teetering point where in an instant we could snap, okay? And this time around, I don't think it's going to be a quiet, you know, dainty kind of a sell-off like we've seen over the last few days, okay? Volume, and just again, the last couple of trading days, as markets have been selling off over here, the volume has been rather light. I could almost say in the S&Ps, anemic in some cases for the fact that the S&Ps have been moving around so much. Just take a look. All right? The down move over here, light. Every day to the down move, we rallied back up. Again, some really peculiar action. Don't get lulled to sleep by the fact this is a slow, grinding sell-off. All right? Look for volatility to kind of rear its ugly head. And again, on a broader sense, in every trade that you put on, whether it's an investment, whether it's a trade, whether it's stocks, options, futures, you think about the right setup and the right risk reward, the right probability for every entry and exit. Tonight, I'm also going to be, as we do every Wednesday night here at TheoTrade, we do what we call our options happy hour. Tonight's no exception. It is Wednesday again, May 4th. I'm going to be doing the options happy hour tonight. We're actually going to be talking tonight about dividends, the risk versus the reward. And that's not just going to be, hey, this is an option, this is a dividend, this is how an option is impacted by a dividend. We're going to look at the idea of dividend-paying stocks. Okay, is it a safe haven or is it considerable risk over there? Additionally, we're going to look at underlyings like Apple. Why are we going to look at Apple? Because there's a dividend coming out. When is it coming out? Tomorrow. Right? Ex-dividend date comes out tomorrow. With that, I want to thank you guys for joining us here at TheoTrade each and every day. Join us. Check out Total Theo and join us in the chat room on a day-to-day basis, or join us in the archives and check out the Wednesday night. That's 7 p.m. Central Time, the Options Happy Hour every Wednesday. It's kind of a mini class for you. Thanks a lot, everybody, for joining us here at TheoTrade. Bye-bye.